I hope you're having an amazing day. My name is Colin, and in this video we're going to have a look at Oracle DAO, OracleDAO.finance, a financial platform that facilitates a multitude of cryptocurrency investing. Oracle is a community-governed yield generation deflationary protocol that is built to sustain in any market condition. All right, built on Polygon, KYC by Obsidian, audited by DeFi security. All right, they have a cool little video here. Let me play that back. Introducing Oracle Finance. Okay, so it's just a little trippy video. Passive yield, reward distribution. Staked ORCL holders will be able to enjoy stable coin distribution rather than rebase rewards, which will prevent inflation being generated due to high staking rewards. Okay. Market dynamics, increasing floor price. Increasing floor price sounds like Tokenomics. Each ORFI token, all right, this is a different one than the ORCL. ORFI token in circulation is backed by a treasury, which gives it an interesting value. The inflows from bonding, Oracle ecosystem, and Oracle capital make sure that the ORFI token has an increasing floor price. So this one is leveraged against the bonding, leveraged against the ecosystem, and leveraged against the capital. If there's no outflow but only inflow, the price would go up. That is right. I'm very curious to see how that works. I usually don't like these models. Oracle Finance will power many platforms and applications, which will grow the entire ecosystem and help bring more profits to the treasury. Oracle Capital, a percentage of treasury is allocated to venture funds, liquid token funds, and yield farming for better capital efficiency and rewards for the entire ecosystem and its user. All right, unique investment opportunities ranging from innovative Web3 products, service applications. All right, so they have a Launchpad and an NFT platform. That is what their ecosystem is like. So investors invest into the Launchpad or NFT platform, and dollar comes out, which goes into the treasury. Investors invest in bonding terms, which go into the treasury. Investors buy tokens on the DEX, which go into staking, and those are the ORFI stakers, and they get rewards from the treasury. And then the treasury puts money into Oracle Capital, which is a venture fund, a liquid token fund, and yield aggregators, which brings money back to the treasury. All right, I see how the ecosystem is set up. Then the only question is, what are the bonding terms? Partners and backers, A1 Ventures, Polygon Alliance. This is Digits Club, High Done, okay, High DNN, okay. The roadmap, team building, website and social launch, Oracle Finance 1.0 version launch, marketing initiatives, community building, core app and Launchpad. Okay, so that's all been completed. Founder KYC and audit, community presale, fair launch, governance setup, yield aggregator, NFT platform 30% completed. Then team expansion, NFT storefront, liquid token trading, publish white paper, marketing and partnerships, liquid token trading, Oracle DEX, farming. That's all to be completed this year. All right, so they're going to move quite quickly indeed. Let's have a look at the white paper. They have a PDF version, but I would like to see profit distribution. No, not specifically. I want to see Oracle Capital, the ecosystem. What was the one metric that I would like to, about the bonding? I want to know about the bonding. There we go. Bonding is one of the primary ways to generate profits for the Oracle Finance Treasury. When a user buys a bond, the protocol quotes the bonder a future contract with terms for the trade. These terms include the discounted price of ORFI, vesting time, and the amount the bond becomes redeemed as it vests. Bonding, reserve token to treasury, mint value profit, ORFI to ORFI. Yeah, I get it. All right. Market price, floor price. However, the price discovery mechanism of the secondary bond market renders bonds discounts more or less unpredictable and has to be monitored consistently. Oracle Finance therefore aims to remove complete dependency on bonding as a sole profit generation revenue from a treasury with the following. With the following what? Oracle Finance plans to launch many applications and platforms which will grow the entire ecosystem and help bring more profits to the treasury. All these features and platforms will come under the Oracle Finance platform. Currently, we plan to build our Launchpad NFT platform. Okay, so there's definitely a unique model. I'm not too sure what the longevity on such a setup is, right? Let's have a look at the tokenomics. Okay, elastic supply. There's no limit on the total number of tokens. Okay, the protocol mints a new token on the bonding price. So basically that's how the bond is being delivered. And every new token minting event increases the overall backing. Yeah, that makes sense. Okay. That doesn't make it deflationary though. It's still the same. It's not inflationary, it's not deflationary. It's basically, well, if you would say if it's not inflationary, then it must be deflationary, then yes. Otherwise, it's just like normal supply and demand growth linearly. For a proper launch, initial sustainability, and for providing sufficient liquidity, we're starting out with an initial token distribution of 2 million. Okay, fair launch 40, team and advisors 20, pre-sale 20, okay, marketing 10, liquidity, okay. Dev fees, so they're taking out some development fees. Okay, vesting schedules, okay. All right, so they basically have mapped out the entire overview here. And there's a reward calculation. So obviously this is quite complex. They try to make a more legitimate process. It's a finance protocol, and I can tell you my honest opinion, you know. I know that my community partnered with this, and I own the community at the end of the day, but I'm not a fan of these protocols, right? I have an AMA with this company next week, and I'll ask them some very difficult questions, because I don't like anything to do with rebase. And they specifically said it is not rebase, but bonding curves is kind of trying to simulate that on a more legit way. And I do understand if they basically generate new tokens with an infinite supply against the bonding price, then yes, everything would stay stable, and the demand potentially, if the utility of the system goes up, but still artificially creating based on the demand, right? Which is like an unnatural process. So I'm not a huge fan of this, but let's have a look at the Launchpad. So it's in the testing mode right now. It's not live yet. Project selection criteria. Project launching IDO and Oracle Launchpad need to meet specific criteria in terms of the ID, potential, project development, and overall security. Detailed report generation. Our teams of experts will evaluate each and every project and prepare a detailed report to help investors make informed decisions. Unlike other launchpads, Oracle Launchpad does not have a tier system. Investors who have staked ORFI tokens and take part in the IDOs. Okay, that's interesting. How's that going to work? Is there on the white paper anything on the Launchpad? That would be cool. Launchpad, Launchpad, Launchpad. No, not yet. Oh, here, capital. No. Launchpad. There we go. So they do like their formulas. Unlike other Launchpad, there won't be a tier system where guaranteed allocation are provided. Only holding is enough to participate. This will democratize the investing landscape and will enable everyone to participate. Okay, well, if you release your tokens on bonding only, yeah. Here K is the tuning parameter. Like, these graphs are utterly useless. Nobody is like a nerd who can read this, or fucking whiz kid that can decipher this. I fucking suck at like fucking math, so I don't know what this means. Cumulative sale, all right, fair enough, makes sense. What about these yield aggregators? Oracle Finance will use a portion of the total treasury for yield, for liquidity mining and yield farming. This will generate almost risk-free rewards. That's not true, because you got like impermanent loss, and increase the overall capacity efficiency of our treasury, creating more value. All right, also one thing I don't like. But choices, choices. Choices, choices indeed. Looks like an interesting project if they can pull it off, you know, if you can find the balance, because I do understand the model. That's why they're basically doing a capital side and an ecosystem side, and then basically looping the money throughout, leveraging third parties, but there's little to no control over the money in like these flows, because what do they invest in? Which yield pools did they choose? How secure are those? Right? I think there should be a DAO somewhere here by the community to control the treasury, which I think is not the case. I think the treasury is controlled by Oracle Finance, which basically makes it their personal fund. Right? Our governance is right here. Wait. Oracle is decentralized, which means that the community plays a key role. Those who hold can vote on important communities like audits, improvements, fund management. Okay. Tip, treasury investment proposal. At first, the development team will guide the project towards sustainable. Okay, full DAO. All right, makes sense. Makes sense. All right. Overall, looks interesting. Looks good. We'll have to see how it goes. Oracle Finance Launchpad is what I'm obviously most interested in, but I'm very interested to see how this, gray area of the market operates in terms of what the platform will actually pull off. Oracle DAO, unique protocol, going into the Launchpad, NFT Launchpad, yield aggregator fund, and then basically selling their tokens on a bonding curve to be able to ensure stability on the price. Definitely a unique concept, definitely a unique idea. There's no information on the team, but they are KYC'd by the auditor, so that is what is public, and that's what you will have to take their word for it. This is everything for Oracle Finance. If you have any questions, feel free to drop them down in the comments below, and I'll be sure to have a look. Thank you so much for watching, and I'll see you in the next one.